Good afternoon, good morning, good evening, everyone. It is 9:08 a.m. Eastern Standard Time on the 16th day of March, 2021. Happy Tuesday. Taking a look at Bitcoin here. Really want to do a little analysis on the Ichimoku charts here on the daily because there's some really interesting price action activity that's occurring. Well, that's price action activity. If you look at the black moving average over here, that is the Chico span or the lagging span, as it's known in English. Notice how, over the past, let's say, beginning of the month, as it's moved closer to the candlesticks, what has it done? It's really, really stayed above at least the closes of the candlesticks for the entire time, really ever since we saw this spike up above the prior all-time high at 41,986. On February 8th, we saw it spike up, and it's really remained above the close of these daily candles ever since then. And so it's just kind of riding along. So we could anticipate this behavior to continue where we see Bitcoin actually drop and trade below 50,000, only to kind of move over and return, and then eventually see it break out and create more new all-time highs. Now, if this was to occur, when would we see that breakout happen? Well, we can project that forward fairly easily. We know that the lagging span where it's at right now, and let's move it over to a couple days before this all-time high. So that's in 16 days, which brings us to April 1st. So on April Fool's Day, we could see Bitcoin drive up higher. Looking at the daily Ichimoku chart, things are still bullish. We see a single span A continuing to move higher, single span B is continuing to appreciate. We see the Tenkan Sen's back above the Kijun Sen. Kijun Sen's got a flat support zone here. Just a lot of continued positive momentum on Bitcoin. I'll look at the weekly chart. We see the same story. We have a very, very strong continuing drive up here. Careful though, because on the weekly chart, we have the Senko span A is flattening out. All right. Senko span A is flattening out. Senko span B is continuing to rise. But watch for any dip in the Tenkan Sen, because that will cause the Senko span A to dip as well, and we don't want to see that happen. But when you look down below, for instance, at the the composite index, we see a really strong hidden bullish divergence that's occurring here. Now, regular bullish divergence occurs when you have lower lows in price and higher lows in the oscillator. A good example of that would be, I'm trying to find one here. Sometimes it's hard to find on candlesticks, but how about this entire move here? This is kind of drastic and really not a good example, but you have the low up here, lower low, but then in the composite index, you have this higher low occur. So that's one example of regular bullish divergence. Hidden bullish divergence is you're still comparing lows, but it's just the opposite. So hidden bullish divergence occurs when you have higher lows in price, but lower lows in the oscillator. Hidden divergences are often more powerful than regular divergences because hidden divergences happen within a trend. They're only valid in the trend direction that they show up. So if we saw hidden bearish divergence, that would not be valid. But if we see hidden bullish divergence, because we are in an uptrend, that is valid. That is a good thing to notice. And the cool thing about hidden divergences is psychologically what's going on is you have bullish participants who haven't totally left the market. They haven't abandoned their positions, but they're not buying as much. But then you have weaker hands who have sold, and you even have some short sellers coming in who are calling the top. And then the divergence steps in and basically says that the momentum to push prices lower despite prices moving higher is drying up, and now we're going to see a return of some really strong bullish activity. So that's what we should see happen here, especially if, rather when, the composite index line, the red average, crosses above the green and or the yellow. That is the real trigger to see more prices moving up. And we've been looking at the percent B here. We have been above the 0.8 level for a while. That's the only thing that makes me a little leery about how much further can this sustain. However, trend lines, you need to use trend lines in your oscillators because they do work, and when they break, they're often more trend lines that are broken in oscillators are more. I find are more reliable than when they break on trend, on a price chart. So we have this shared downtrend angles from these peaks in both the percent B and the composite index, and when the percent B crosses above its trend line, and when the composite index crosses above its trend line, that's a really strong signal to see prices continue to move higher. The other nice thing about this, and the other argument for higher prices, is that the distance that Bitcoin is at on the weekly chart between the Tenkan Sen and the Kijun Sen is well within the normal value range. We should not see a huge reason to look at the short side of the market here, except on shorter time frames. Now, if we look at the weekly chart, the 3-week chart, you get a little bit of a different picture here because the 3-week chart, this next 3-week candle doesn't close until the 21st. We are a pretty good distance away from the Tenkan Sen relative to how far it's been in the most recent past. So be on the lookout for that. But there's still plenty of upside potential here. And the Kumo twist that exists, if you look over here in the week of March 7th, 2022, so basically a year from now, the minute that we see some really strong sell pressure between now and then is probably going to have a prolonged either downtrend or a prolonged range trade that will exist until March of 2022. And then we'll see it continue higher. But otherwise, there's a lot of reasons to maintain a bullish outlook and a bullish bias. And I see no reason to change that, even though in the short term, some short-term selling is certainly in the cards. But over the long term here, this is definitely a buy the dip market. Thank you all for watching. From all of us here at Exchange Rates UK TV, please don't forget to like and subscribe.